Monday, traders, and welcome to another week in markets. Look, in the last couple of weeks, we've had some huge volatility, some big moves in markets, and there's a lot on again this week for traders to navigate. Look, the first thing that traders need to navigate is geopolitical risks. It seems like we're getting quite a few headlines and intelligence and intel that there may be an imminent attack by Iran on Israel and its allies in the next 24 to 48 hours. No doubt if that attack did come, last time when we saw Iran attack Israel in April, it was more of just making a statement. They didn't really make any damage, but it seems as if this one might be a bit more meaningful, a bit more significant, and certainly if we did see some damage done, no doubt we're going to see some big moves in markets. Namely, obviously, gold will probably spike up, taking up, say, record highs at 2480, and maybe go above 2500. And obviously, you've got to watch crude as well, because if there's some supply disruptions in the Middle East, then crude generally spikes up, and risk across the board will probably get hit as well. Okay, so geopolitical tensions aside, the next thing that traders really need to watch is keep an eye on dollar yen. So dollar yen was the reason that we had a lot of volatility in the last week and saw risk really roll over due to the unwinding of the carry trade. So we saw a low of dollar yen last week down below 142, around that 140, 180 area. Dollar yen has had a decent rally back off those lows. We're starting the week in Asia around that 147 level, so we're a good 500-600 points off those lows. So that has actually helped risk rebound as well. So we're seeing S&P and Nasdaq have a good finish of last week and open reasonably well this week. But however, if we do see dollar yen sell off, you might want to start being a little bit cautious with being long risk. But no doubt, look, dollar yen up towards I think 150. And certainly, towards 152, if we get that high at some stage, we've got a lot of client interest to sell up that levels, and I'm sure the market's waiting as well. Okay, so moving along, the other big thing that we've got this week is we've got some top-tier US data coming out in retail sales and US CPI. The big debate the market's having at the moment is whether or not the US is actually going into recession at the moment, whether or not the Fed's behind the curve, and how much the Fed needs to cut rates before the end of the year. So with retail sales, market's expecting a 0.4% increase on the month. Look, if retail sales came in, there or above expectations, certainly, that's going to be seen favourably by the market, and it should do well for risk, but we might start pricing out some of the more aggressive rate cuts by the Fed. And then with CPI, the focus here is on the core month-on-month figure. Look, anything 0.3 and above is obviously not going to be good for the market, because potentially they're going to start looking at the US economy being in a stagflation situation where you've got sticky inflation but an economy that's also rolling over. So I'd say that's the worst case scenario. Markets might sell off quite aggressively on a higher CPI read. But if we get a CPI that comes in month on month on the core number below, say, or 0.2 or below, no doubt market will be happy with that, more progress on inflation, and they'll start to be more happy pricing in those rate cuts by the Fed starting in September. And we've also got an RBNZ meeting. Market's sort of 50-50 coin flip on that, whether or not they're going to cut rates. If they do cut rates, with I guess the RBA being more hawkish at the moment, maybe you might want to start looking at Aussie Kiwi longs. So yes, look, a lot on. Good luck out there, and we'll check back in soon.